Hello everyone and welcome back to Explain the Charts, your channel for detailed, no-nonsense technical analysis. Today, on October 11th, 2025, we are diving deep into Litecoin, or LTCUSD, which has been making major headlines and explosive moves on the charts. The entire crypto market is buzzing with anticipation over the imminent decision on a spot Litecoin ETF. News outlets are reporting that an approval from the SEC is considered a done deal by many analysts, with Canary Capital's amended S-1 filing being a key indicator that we're in the final stages. This news has fueled a massive wave of bullish sentiment, with institutional buying reportedly up 15% in October and daily trading volume surging over 170% to more than $2 billion. Analysts are throwing out some very optimistic price targets, ranging from $150 in the short term to ambitious long-term goals of $275 and even $400, contingent on this ETF approval. However, there is a major caveat. The ongoing U.S. government shutdown has paused SEC operations, creating short-term uncertainty and delaying the official decision deadline. This combination of extreme bullishness and regulatory delay is creating the perfect storm for volatility, which is exactly what we're seeing on the charts. Now, let's switch over to the technicals and look at the daily chart for LTCUSD. Looking at the big picture, we can see Litecoin was in a long consolidation and downtrend for a good portion of 2025. After a major drop in March that took the price from around $130 down to the low $80s, LTC traded in a wide range, building a solid base primarily between $85 and $115. This multi-month sideways action was crucial for absorbing selling pressure and setting the stage for the next major move. That move began in earnest at the start of October, perfectly correlating with the intensifying ETF news cycle. We saw an initial powerful surge on October 1st, followed by a brief consolidation and then another explosive leg up just a couple of days ago. This move convincingly broke out of that long-term consolidation range, a classic and powerful bullish technical signal. The price smashed through the $115 resistance and quickly challenged the $130 to $135 zone, which was a resistance area established back in December of 2024. However, yesterday's candle on October 10th is something every trader needs to pay close attention to. Let's zoom in on the daily chart for the past month to really see the recent action. Here you can see the breakout in early October, followed by the powerful push towards $135. But look at this candle from October 10th. It shows an intraday high of nearly $136, but a shocking low all the way down at $52.88, before closing back at $99.22. This massive lower wick represents a dramatic flash crash and an immediate, aggressive buyback. This is a sign of extreme volatility and a potential massive shakeout or liquidity grab, designed to wipe out leveraged positions before a potential move higher. It also tells us that there is immense buying interest at lower levels, but the risk of sudden, sharp drops is currently very high. This event has established two very important short-term levels: the high near $135 as major resistance and the close near $99 as critical support. To understand what happened during that flash crash, we need to look at a lower time frame. Let's pull up the 15-minute chart and focus on the action from yesterday, October 10th. We can see the price climbing steadily, peaking around 13:18 Universal Time Coordinated. The market then traded sideways for several hours before the chaos began around 2100 hours Universal Time Coordinated. Here's the first major drop, a massive red candle taking the price from over $122 down to $104 in just 15 minutes. But the very next candle is the main event. It opened near $104, wicked all the way down to a low of $52.88, and then was aggressively bought all the way back up to close at $98.32. This was a classic, brutal stop hunt and liquidity grab, likely triggered by a large market order or a temporary evaporation of bids on the order book. Following that event, we see a V-shaped recovery, with buyers stepping in and pushing the price back above $100 and even towards $110 in the subsequent hours. This intraday action confirms the extreme nervousness in the market, but also shows resilience from the bulls at those deeply discounted prices. So, to recap everything and discuss what to look for going forward, let's return to the daily chart. The bullish case is strong and rests almost entirely on the ETF approval. If and when the ETF is approved, we can expect a significant influx of institutional capital. For bulls, the first major hurdle is to reclaim and hold the $130 to $135 resistance area. A confident break above $140 would reinforce the bullish trend and open the door to analyst targets of $200 and potentially $275 in the medium term. The bearish case hinges on a prolonged ETF delay or an unexpected rejection. The extreme volatility is a major red flag, showing the market is on a knife's edge. The most critical support level to watch now is the $99 to $100 area, the closing price of that volatile October 10th candle. A daily close below this level would be a major victory for the bears, suggesting the breakout has failed and opening up a potential retest of the $80 to $85 support zone from the previous range. In terms of likelihood, a scenario where the ETF is approved shortly after the government shutdown ends, leading to a test of higher resistance levels, seems the most probable, perhaps a 70% chance. A period of choppy consolidation between $100 and $130 due to continued delays is also quite possible, maybe a 25% chance. A full breakdown below $99 and a return to the old range is the least likely scenario at around 5%, but that flash crash proves it remains a possibility. The key thing to watch is news from the SEC. Until then, expect continued volatility and be cautious of the massive wicks we've seen. This concludes our analysis of LTCUSD. Please remember, this is not financial advice. Cryptocurrency markets are extremely volatile, and you should always do your own research before making any investment decisions. Thanks for watching Explain the Charts. Don't forget to like this video and subscribe for more in-depth chart analysis.